Forget everything you think you know about Bitcoin. By 2026, it's not just going to be digital gold. It's going to be a global financial network, faster and smarter than anything we've seen. And today, I'm showing you exactly how. What's up everyone, and welcome back to the channel. We all know Bitcoin as the OG cryptocurrency, the secure store of value. But for years, people have criticized it for being slow and expensive for everyday transactions. Remember trying to buy a coffee with Bitcoin back in the day? It was a joke. The transaction fee could cost more than the coffee itself, and you'd be waiting 30 minutes for it to confirm. Those days are officially ending. The year is 2026, and the Bitcoin network is undergoing its most significant evolution yet. This isn't just about number go up. This is about fundamental technology that's changing the game. So what's the magic behind this transformation? It all comes down to one word: scaling. For Bitcoin to handle millions, or even billions, of transactions per day, it can't do it all on its main blockchain. That would be like trying to fit all the world's internet traffic through a single dial-up modem. The solution is layer to south, and in 2026, they are bigger and better than ever. First up, let's talk about the Lightning Network. You've probably heard of it, but the Lightning Network of 2026 is a completely different beast. Imagine instant, virtually free Bitcoin transactions. That's the reality now. Thanks to major upgrades and widespread adoption, you can pay for your groceries, stream music, or tip your favorite content creator, all in a fraction of a second. For a fraction of a cent, major companies and payment processors have integrated Lightning, making it as seamless as using your credit card, but without the middleman. The user experience has been totally redesigned. New wallets make it incredibly simple to open channels and manage your funds without needing a degree in computer science. It just works, but the evolution doesn't stop with just payments. The next big thing shaking up the Bitcoin ecosystem is the rise of sidechains and drivechains. Think of these as parallel universes connected to the main Bitcoin blockchain. They allow for experimentation and new features without compromising Bitcoin's core security. One of the most exciting developments is the explosion of smart contracts on Bitcoin. Yes, you heard that right. Complex financial applications, decentralized exchanges, and even NFTs are now thriving on Bitcoin sidechains. Projects like Stacks have matured, bringing full-blown smart contract functionality secured by Bitcoin's hash power. Imagine DeFi protocols with the security of the world's most robust blockchain. We're seeing lending, borrowing, and trading platforms built on Bitcoin, creating a parallel financial system that is more decentralized and resilient than anything on other chains. This isn't a theoretical concept anymore. It's a multi-billion-dollar ecosystem. Developers are flocking to build on Bitcoin because of its unmatched security and brand recognition. This brings a whole new wave of innovation and utility to the network. Another game changer is something called client-side validation, pioneered by concepts like RGB. This is a bit technical, but stick with me because it's revolutionary. Instead of broadcasting every single transaction detail to the entire world, client-side validation keeps data private and off-chain. It lets you issue and transfer complex assets, like stocks or digital collectibles, on top of Bitcoin, but in a way that's incredibly scalable and private. Think of it as sending a private, encrypted message that only the recipient can see, but everyone can still verify its authenticity without knowing the contents. This technology unlocks a whole new world of possibilities for enterprise use cases and private financial instruments, all anchored to Bitcoin's trust layer. Now, let's look under the hood at the Bitcoin core protocol itself. The developers haven't been sitting still. By 2026, we've seen several soft forks that have quietly but dramatically improved the network. One of the most impactful is the introduction of covenant technology. Covenants are a way to place restrictions on how Bitcoin can be spent in the future. This sounds simple, but it has profound implications. It allows for the creation of super secure vaults, where even if a hacker steals your private keys, they can't immediately drain your funds. The coins might be locked for a certain period or can only be sent to a pre-approved recovery address. This makes self-custody immensely safer for the average person and for large institutions. Covenants also unlock more sophisticated layer 2 designs, making the entire scaling ecosystem more robust and secure. These upgrades also make Bitcoin more efficient. While the energy debate is still around, the narrative has shifted completely. The growth of layer 2 solutions means that a single on-chain Bitcoin transaction can now secure thousands, or even millions, of off-chain transactions. The energy cost per economic activity has plummeted. Furthermore, Bitcoin mining in 2026 is leading the charge in energy innovation. Miners are increasingly using stranded, renewable, or wasted energy sources like flared gas from oil fields or excess hydro and solar power. They are acting as a global energy beer of last resort, stabilizing power grids and incentivizing the build-out of new renewable energy infrastructure. The conversation is no longer about how much energy Bitcoin uses, but how it's driving a more efficient and sustainable energy future. So what does this all mean for you, the user, in 2026? It means Bitcoin is no longer just a volatile investment asset you hold and hope goes up. It's a functional part of the digital economy. You can earn Bitcoin through your work, spend it instantly on goods and services anywhere in the world, use it as collateral for a loan in a DeFi protocol, and store your long-term savings in a super secure digital vault. The user experience is seamless. Wallets are intuitive, integrating both on-chain and Lightning transactions without you even noticing the difference. You don't need to be a tech expert to use it safely and effectively. The global impact is even more profound in countries with unstable currencies. Bitcoin offers a lifeline. With the improved accessibility and low transaction costs, people can protect their savings from inflation and participate in the global economy in a way they never could before. It's becoming a true tool for financial empowerment, a neutral settlement layer for the world. Businesses are also reaping the benefits. They can accept payments from anyone, anywhere, with final settlement in minutes, not days, and without the high fees of traditional payment networks. This is fostering a new wave of global commerce and entrepreneurship. The Bitcoin of 2026 is the fulfillment of its original promise, a peer-to-peer electronic cash system for the internet, but it's also so much more. It's a robust settlement layer for a new, decentralized financial system. It's a secure store of value that is more accessible than ever. The slow, clunky Bitcoin of the past has evolved into a high-performance, multi-layered ecosystem the tortoise has put on a rocket path. It maintained its core principles of decentralization and security while embracing innovation through layers. This is the key. It didn't change its fundamental nature. It built upon it. The future is layered, and Bitcoin is the base layer for a more open, fair, and efficient financial world. The innovations we discussed today, Lightning, cytokines, covenants, client-side validation, they aren't just technical jargon. They are the building blocks of a global revolution. And it's happening right now. Thanks so much for watching. If you found this look into the future of Bitcoin exciting, hit that like button and subscribe for more deep dives into the world of crypto. See you in the next one.